Very, very, very excited to be here. As was mentioned, my name is Henri Arslanian, and really my passion and my focus in life is the future of the financial services industry. And I'm very, very excited to be actually able to have the opportunity to share with you all today. My goal is very, very simple. I want to share with you all some of the latest trends we've been seeing in the global fintech ecosystem, and hopefully empower you with some of these latest trends that then you can use today as you think about the future of this industry. But even more importantly, as you go back to your offices next week and you have to make decisions on where to allocate headcount, budget, and for the central bankers and regulators in the room, where to focus your energy from a policy perspective. And I'm really going to focus on three main items. Try to keep it very, very simple. It'll be TechFin, crypto, and AI. That's it. And these are the three big elements that you need to have at least an understanding and a point of view on. And this is even more interesting because as I will present today, what we may see is that all these verticals will actually have a big impact on fintech, on the industry, especially TechFin when it comes to open banking. But it's really going to be the combination of these who will have an outsized impact on the financial services industry. And really, before I start, I always give this warning. Is whoever tells you they're an expert in some of these topics, crypto and others, you have to run away. I can tell you I spend 24/7 of my time in this space. I'm a bit of a loser. I spend my Friday nights, Saturday nights reading about this topic, and I have absolutely no idea where this industry will be, especially when it comes to crypto 1 month from now. So today, that's why I'm going to share with you some of the latest trends and let you make your own decision of where this industry is going to be heading in the next couple of years. Let's start first with fintech startups. Over the last couple of years, we've been often talking about how fintech startups are coming to disrupt this industry. But what we actually saw in practice was a lot of the game-changing innovations came up with TechFin. And for the future of finance, as Brett mentions, you have to look at China, which is years ahead of everybody else in the world. For example, WeChat, the mobile messaging application, has more than 1 billion monthly active users. But it's not only that. 1/3 of those users, 1 user out of 3, uses the app more than 4 hours a day. And these firms actually obviously went into financial services. We just talked today about Yubao, the money market fund, which launched in 2013, that has now become the biggest money market fund in the world in less than 5 years, dislodging incumbents who have been doing this for decades. It is 6 times bigger than JP Morgan, who has been doing this for decades. And the big question everybody's been asking, can this happen outside of China? Or is this just a China thing? Facebook, as many of you know, has already licenses in most US states, has a license from the Central Bank of Ireland. Amazon, in the last 2 years, has lent more than $3 billion to SMEs, to 20,000 SMEs that otherwise would have come to commercial banks. And actually, when you ask the customers, 50% of customers, users of these technology platforms, say they will be very open to using financial products from technology firms. But the number even goes higher when you talk about millennials. 75% of millennials surveyed said they'd be very happy to actually test some of the products, banking products from some of the banking providers. And this really begs up a bigger question, especially as we go into open banking. What are going to be the financial institutions of the future? The players that we all know about, or the large technology firms? And really, even governments have started noticing this as well. Denmark last year named an ambassador to technology firms. Just to clarify, this is not a minister of IT or somebody who's responsible for bringing investments inside a country. This is somebody with diplomatic credential whose role is to deal with technology firms as if they were different countries. It makes sense. Apple cash reserves are larger than Finland's GDP. And this becomes even more important when we talk about an open banking context. Today, the way obviously we look at open banking, each of us has its own vault. We never share the customer data unless obviously regulators ask for it, which is never good news. And as we move on to this open framework, where as an institution, we will need to share the information with a third party if they request it, if our customer allows it to do so. And we move on, often the best analogy I give to a house, where we give to other people the dimensions of our windows, the dimension of our house, where it's still our house, but others can come in and actually take some of the stuff that we have inside the house. And really, this changes the entire paradigm of how banking is going to evolve. The entire ecosystem, the way as we know it, has to be open and drive with other ecosystem players. And this has been driven in large part by leading central banks around the world. We heard this morning what Central Bank of Bahrain is doing here, which is very impressive. And actually, a lot of other leading central banks around the world has been actually following through as well. And this is very fundamentally important because it may change the way actually of the banking models of the future as we know it. Today, as a bank, you obviously have a very good relationship with your customers. But the problem in a new environment is that you may just be commoditized utility provider and you've lost a direct access with your customer. And the customer-first interface becomes a financial platform, which could be another bank that has moved faster than you, could be a startup, or probably more worrying for many, the large technology firms. And how can we react to this? Obviously, we can talk about bank transformation. For me, this slide, this graph, explains exactly how bank transformation takes place. We can all try to innovate the bank, but as we all know, it's extremely difficult. Why? Not because we don't want to, because the spaghetti of legacy systems. And this morning we heard about how actually ABC is launching a new digital-only bank. But we will need, every financial institution will need to make this decision. The big dilemma, whether you try to fix the spaghetti without getting too messy, or you start a new sheet of paper. And this is why we've been seeing now banks around the world launch these new digital banks. From across the world, start new team with new teams, cloud-based systems, open architectures, really would over time may actually be the main bank as we close the other ones. But also this gives us the opportunity to rethink our relationship with our customers. I'm sure if I ask you all, what is the relationship you have with your customers? You probably tell me we are their trusted partner. We're with them in good times and bad times. We're with them since they're a kid, they grow up, they start working until they'll die. But actually, that's pretty much BS. Because if actually when we ask your customers, that's not what they're saying. And actually, in many cases, the banks, really the question comes up, are the banks really there for you? Let me give you this piece of data that shocks me every time. In the United States today, 57% of Americans don't have $400 in their account. 43% of them have credit card debt for more than 2 years. There's a lot of things we can discuss, the consequences of this, but if we focus on a banking perspective, you would think the banks were here to help these customers? Actually, not really. Overdraft fees have gone up over the last couple of years consistently, and actually, a client that doesn't have much savings, uses credit cards a lot, borrows a lot, is actually a pretty good client for a bank. And this is why in this new open banking environment, we're seeing this radically potentially change. With one of the big trends we're seeing right now, which is the rise of the concept of financial health. I'll go to the gym and I'll work out for my physical health. I'll meditate or I'll pray for my mental health. But actually, why am I not using FinTech for my financial health? To try to avoid some of these situations. And this is actually one of the big opportunities we have right now in an open banking context. And I'm going to give you guys one example of how the new technology firms and fintechs are able to change and solve these real problems. I'll give you guys an example in a completely different industry, not to offend anybody. In the insurance industry, another industry that everybody hates, of what one startup has been doing in the United States called Lemonade. Lemonade this is a new app. You want to buy insurance? You can buy anytime you want. From the comfort of your home, this is an AI bot that replies to you. Very user-friendly. You can do it at 2 a.m. or at 2 p.m., doesn't matter. Tell them what you want. Replies to you on the spot. Very easy, no small characters, very visual. Of course, you pay on the spot. Again, helps you again solve some of these problems you have of refund, all digital. And also gives what you want from a CSR perspective. And let's then address some of the biggest pain point we have in the insurance industry, claims. Anybody who submitted a claim for insurance know how fun that process is. You did it, tell them what happened. Again, on a chatbot anytime you want. An AI chatbot replies to you. For compliance purposes, you record. That's it. As simple as that. This company broke the world record last December of the fastest claim paid for any insurance product. It paid its claim in exactly 6 seconds. That's it. Nobody took this company seriously. They're about more than 5% of market share. 1/3 of their clients are actually new clients. I've never bought these kind of products before. So a great example actually solving real problem that the industry had. Now let's talk about crypto assets. If one of your senior management or one of your head of strategy tells you, don't worry about crypto, it's all used by drug dealers, it's not regulated, do me a favor. When you go back to the office, you pick up your phone and you fire him. If he tells you why, you tell him Henri Arslanian said so. This is a space you need to be aware of what's happening because it will have a very outsized impact on the financial service industry. People talk about Bitcoin. The space out right now has more than 2,000 different cryptocurrencies in the market. The space is evolving continuously. You have a whole new ecosystem of players in the crypto space that have evolved. Some of these companies are making more than $1 billion a year in revenue. And one of the most innovative things going on in this space are actually here regulators. We saw here in Bahrain last December some of the new announcements that came up in crypto. We are now seeing regulators around the world provide clarity and comfort to actually the crypto ecosystem. I believe that by the end of this year, any country that doesn't have regulations in the space will have probably missed the boat. And this is providing comfort to the financial ecosystem to get increasingly more involved. But also we're seeing a lot of innovations in this space. One of them is the rise of stablecoins. If tomorrow morning I send you Bitcoin, it's extremely volatile. You may not want to take it, we don't know what's going to happen with the price. But these are stablecoins, are crypto assets that are backed by real-world assets, fiat currencies, like US dollar, for example. This allows me to send you a crypto payment, happens instantaneously, no fees, it's stable, and I can do this on a cross-border basis with no FX fees and actually on an instantaneous basis. And this is why we're seeing not only a lot of retail people and the volumes are increasing, but also institutions. JP Morgan last week announced the launch of the JP Morgan coin that is doing this for corporate and institutional clients. But another big trend we're seeing is really the rise of security tokens. If tomorrow morning I want to go buy this Ritz-Carlton hotel, unless I have a couple $100 million myself, or I'm one of the large groups, I cannot buy it. There's an illiquidity discount to some of these big assets. But what if I take this hotel and I separate it into 10,000 different tranches of $100,000 and actually sell those on the market? Not only creates secondary market where there's liquidity, allows actually broader base of investors to access, but also, if I put my lawyer hat on, allows us to completely streamline corporate actions. If I want to pay dividend or do a voting of the shareholders, no more ex-dividend days, I can do this instantaneously on the spot. And this has happened with other hotels and other real estate assets around the world, which could be very interesting for the Middle East. Crypto exchanges are becoming increasingly more institutionalized. Crypto funds. We're having more and more crypto funds launched that traditional banks now are looking at servicing. Let me give you an analogy. In 1990, the total hedge fund industry AUM was around $20 billion. Now, it's over $3 trillion. Today, the AUM of the crypto funds is around $20 billion. The question is, how quickly, if and when it will grow to that $3 trillion that we have with other alternatives right now. And this is why we're seeing a lot of institutional players enter the space. You know, we've seen Goldman Sachs do investments in crypto custodians, crypto exchanges. Nomura out of London announced an offering for crypto institutional custody. Fidelity in the US has 100 people full-time working on crypto. And the JP Morgan announcement last week. And many believe this could be the saving grace for a lot of the banks when it comes to the institutional capital market side. But here again, the tech firms are not behind. Think about a firm like Amazon. How much it must be paying in credit card fees, FX fees, and other various kind of fees to different financial institutions. What if it launched its own cryptocurrency? I mean, only in the US, they already have 90 million customers subscribed to their Prime offering. And many believe it's just a matter of time before this happens. But think of even bigger technology firms. Think about Facebook with more than 2 billion customers. Facebook issued its own cryptocurrency. What if it became its own central bank and allowed people to be able to use that kind of services? Think about a migrant worker sending money back home using a Facebook coin. This may sound far-fetched, but actually they're working on it as well. And think about such an innovation could happen completely outside the banking system, and also it could be quite scary for central banks. Now let's talk about central banks. If you're a central banker today and you like Bitcoin, you're crazy. This is a bit like being a taxi driver and being excited about the arrival of Uber. The good news, though, central bankers have realized the potential of this. And this is why we're seeing now central banks around the world experiment with cryptocurrencies. Because if you want to have the economic policy, the pulse of your country on a live basis, you want to actually try to destroy corruption, tackle AML, and actually be able to put capital controls even if you wanted to, cryptocurrencies are a great tool for this. But there's risks as well. One of the biggest risks we have for central banks and for banks is that if a central bank issues its own cryptocurrency, many believe money will flow out from the banks and go to a central bank-backed cryptocurrency. If you want a really risk-free asset, here you have one. And this is why, for example, South Korea's central bank just decided they're not going to launch their own cryptocurrency because they're worried it may cause financial instability, money may flow out of the banks, and it may cause a rise of interest rates. And I'll finish up with AI. Obviously, we're seeing the rise in what's happening in the artificial intelligence space is very hard to keep up. Obviously, the volume of data being created every year is going at exponential pace. The cost of storing data is obviously going fundamentally down. But we have the problem of the AI flywheel, which makes it very difficult for banks to compete. The more users you have, the more data you generate, the better product you have, which in turn gives you better users, and so on and so forth. This is why many believe that the only way for banks to compete against technology firms and other startups is via open banking, where you're able to leverage some of these innovations that have been coming up, especially as we look at the future of finance. For example, today, voice-based recognition is at 95%, which is it's almost at human levels right now with some of the tools that we have. And the question really becomes, is the banking interface of the future going to be a tool like this, where it's all voice-based like we saw in Bert's video? Today, 20% of adults, for example, in the US, have one at home. And imagine how the future of banking, the last couple of years we focused on being mobile first, we may move in the coming years and being voice first. But the problem, this is still very reactive. I have to tell my tool, Alexa, do this or do that. But now we're seeing innovation where a lot of these tools are working on their own. Let me show a quick video of what we're doing right now with Google.
Hi, I'm calling to book a women's haircut for a client. I'm looking for something on May 3rd.
It turns out a big part of getting things done is making a phone call. We think AI can help with this problem. Let's say you want to ask Google to make you a haircut appointment on Tuesday between 10 and noon. What happens is the Google Assistant makes the call seamlessly in the background for you. So what you're going to hear is the Google Assistant actually calling a real salon to schedule the appointment for you. Let's listen.
So how can I help you? Hi, I'm calling to book a women's haircut for a client. I'm looking for something on May 3rd. Sure, give me 1 second. Sure, what time are you looking for around? At 12 p.m. We do not have a 12 p.m. available. The closest we have to that is a 1:15. Do you have anything between 10 a.m. and 12 p.m.? Depending on what service she would like. What service is she looking for? Just a woman's haircut for now. Okay, we have a 10 o'clock. 10 a.m. is fine. Okay, what's her first name? The first name is Lisa. Okay, perfect. So I will see Lisa at 10 o'clock on May 3rd. Okay, great. Thanks. Great. Have a great day. Bye.
Impressive, huh? And you can see really the impact. Imagine the impact this can have on the banking industry. So really today we saw obviously the differences between what's happening on the TechFin side, especially with open banking, crypto, and AI with some of these innovations going on. But really what we have to look out for the future is when we get these things to actually work and have this outsized impact as the exponential relationship comes up. Let me give a quick example. Today, as a user, you give all your data away to companies like Facebook or Google to access the platform or access their search engine. You get zero in return except using the platform. And we're moving to an era that you will be compensated for your data. That if you want it, you'll be able to share it with platforms, you'll get paid immediately on cryptocurrencies, and also the value of your data may be different from your neighbor next door. If you have a normal 9-to-5 life, maybe the data is not that valuable. But what if on weekends you're a triathlete or you're a frequent traveler and your data is worth more than others? And all this pricing, real time, will happen using AI-based engine. So a great example of fintech, crypto, and AI are coming together. The other one is when we come to the machine-to-machine economy. Imagine your fridge, a smart fridge, has known your habits of eating, or not only automatically reorders the food for you, knowing what you want, but also puts in consideration your financial health applications that you've been using to ensure that you're still in your budget. And obviously, all these little payments happen in crypto, of course, and these can happen on a cross-border perspective and on a continuous basis. This is not that when you go shopping, you're looking for goods at a certain time. These tools are continuously looking for the best price. And again, what's the role of a bank in this? And as to finish it off, as banking and community leaders, we have to ask ourselves certain questions. These will raise a lot of new ethical questions. If I put my lawyer hat again, these are a lot of very challenging questions are coming up. Big one again, are bankers the new horses? In 1900, you had in the US 35 million horses. This was a government census, 35 million horses in 1900. 70 years later, in less than one generation, they stopped doing the census. Why? Because we have tractors. Why would you use a horse when you have a tractor? But the horse has done nothing wrong. It's as muscular, beautiful, and cute as it was before. It's just that we have a better tool. And the question is, could that happen to the financial services industry? You know, many experts argue that over the next coming years, one banking job out of 3 will disappear. Imagine that 1/3 of you are not here at this FinTech conference in a couple of years. Not because we don't want you, but because we don't need you. And this is actually one of the big dilemmas as policymakers we need to decide. We've all seen what happened to UBS with their trading floor, that by the way now is closed down. But also there's a lot of ethical questions are coming up. And I'm going to finish up with this one video that if you want to see what's happening on the cutting edge, you have to look, fortunately or unfortunately, to Japan.
朝ですよ。起きてください。ねえ、起きてってば。おはよう。
おはよう。
あ、今日雨が降るかもしれないから傘持って行って。急がないと遅刻しちゃうよ。
行ってきます。
行ってらっしゃい。気をつけてね。
19ページ、商品のラインナップについては。
おかえりなさい。
なんかさ、家で誰かが待ってるっていいもんだな。さっき思ったんだ。帰ってくるとき。おやすみ。
おやすみなさい。
Scary, huh? By the way, I'm not recommending that you leave your partner for one of these things. If you're interested, by the way, it costs $5,000. They're unfortunately sold out. Last month in Japan, there was the first wedding of a Japanese man with one of these things. My wife hates this video. It is what it is. Thank you very much, everybody. I'll be around for the rest of the day if you have questions. Thank you very much.